Listen, if you are a US investor holding crypto right now and you click away from this explainer, you are going to be completely blind to the next billion-dollar liquidation wipeout. Because here's the twist. While retail traders are out there panic selling Bitcoin over Middle East oil fears and a massive $958 million flush, institutions are quietly weaponizing XRP into a federally regulated full-stack bank. I mean, just think about that $958 million figure for a second. That is nearly $1 billion of capital, literally wiped off the map in under 24 hours. So here is my promise to you. By the end of this explainer, you are going to have the exact timeline of the US Senate's Clarity Act, and you'll know exactly where the smart money is hiding its capital right now. We are going to break down the mechanics of this crash and, more importantly, uncover the hidden institutional accumulation happening right underneath all this panic.
But look, if you are watching this without a subscription to Crypto Global News, you are missing the critical market alerts, period. Click subscribe to stay on the timeline. It's completely free for you, but it gives me the motivation to keep making more explainers exactly like this one. You've got to be positioned ahead of these massive institutional moves, not just reacting to them after the fact.
Okay, let's dive right into exactly what is triggering this massive panic. If you woke up today to an absolute sea of red, here is the immediate market bleed. We saw Bitcoin plunge roughly 3%, which dragged it down to $72,801, severely testing the bottom of its key 73K structural support. Ethereum, it slipped right under that absolutely vital psychological floor of $1,985, hitting its lowest valuation since early April. And the altcoin Bloodbath, it's honestly even steeper. Solana dropped 3%, Chainlink down 4.4%, and the SUI network absolutely cratered over 7.5%. The Crypto Fear and Greed Index has violently slammed right back into extreme fear. And to make matters even worse for the altcoin sector, the SUI blockchain suffered another incredibly untimely network outage right as its token price was plummeting. Talk about bad timing. It locked traders out exactly when they needed access the most. Look, during extreme volatility like this, infrastructure failures can absolutely multiply your losses. So make sure you check the Telegram channel for live network outage updates so you are never caught off guard when a major chain suddenly goes dark. Now, this domino effect we're seeing, it wasn't just some random market correction. It all started with geopolitics. The U.S. Central Command initiated a second round of airstrikes on military assets near the Strait of Hormuz. And because the specific strait controls about 20% of the global oil trade, Brent Crude instantly spiked to near $98 a barrel. That oil squeeze immediately sparked global inflation fears, causing Wall Street to dump crypto as a high-risk asset. The direct result of all this? Nervous institutions pulled a staggering $1.3 billion out of Bitcoin ETFs in a single-day exodus. So the really crucial point here is how this global instability directly impacts our domestic monetary policy. Right now, U.S. inflation is sticking stubbornly at 3.8%. And because inflation isn't cooling down and oil prices are on the rise, futures markets are now pricing in a massive 97% probability that the Federal Reserve will completely freeze interest rates at the upcoming June FOMC meeting. And we all know what that means. No rate cuts mean restricted market liquidity. And restricted liquidity, that means less capital flowing into speculative tech and crypto assets. And this perfectly illustrates the brutal reality of what happens when restricted liquidity collides with retail greed. Just look at this liquidation washout. A mind-blowing 93% of the liquidations were long positions. That is $897 million in longs entirely destroyed, compared to just $61 million in short positions. This absolutely proves, without a doubt, that buyers were aggressively over-leveraged before the flush. They ignored the macro data, and they paid the ultimate price for it. To give you an idea of the sheer scale of this derivatives frenzy, Ethereum futures open interest had literally just hit an all-time high of 16 million ETH. Traders were recklessly piling on leverage like there was no tomorrow. We actually tracked one massive whale on the Hyperliquid platform who suffered a devastating $33.86 million paper loss on a single Ethereum long position. Think about that for a second. That loss was more than double their initial margin. This right here is exactly why tracking on-chain mechanics is a matter of pure survival in this market. But here is where we need to execute a really sharp pivot. Because while the rest of the market is out there panicking over leverage flushes and macroeconomic fears, we need to look closely at what the smart money is actually doing. Yes, XRP did slip about 4%, dropping below $1.30 due to the broader market sell-off. But if you're only looking at the daily price chart, you are missing the monumental shift happening right in the background. XRP is quietly, but surely, transforming into foundational institutional infrastructure. In fact, Ripple is officially executing a full-stack banking pivot. They've made these recent, massive trademark filings, with target execution scopes mapping out to May 15, 2026. And these filings cover the whole shebang: prime brokerage, decentralized exchanges, and comprehensive securities lending. This indicates a total evolution. Ripple is no longer just some cross-border payments app. They are aggressively morphing into a comprehensive, vertically integrated financial institution designed specifically for Wall Street. And what's crazy is they are actively securing the federal oversight required to actually run that institution. The Office of the Comptroller of the Currency, the OCC, has granted conditional approval for Ripple National Trust Bank. Guys, this is a total game changer. It places the asset reserves for Ripple's stablecoin RLUSD, which just surpassed a $1.7 billion market cap, under direct, rigorous federal banking supervision. They are literally building a regulated fortress right in the middle of a chaotic crypto market. And this regulatory clarity is already driving massive real-world utility. Look at the progression here. In step 1, major traditional finance players like JP Morgan and MasterCard successfully executed cross-border redemptions of tokenized U.S. treasuries natively on the XRP ledger. Then, step 2 introduces a massive global geopolitical pivot. The Moscow Exchange, MOX, officially launched regulated XRP futures. And as global sanctions continue to tighten, step 3 shows on-chain reports indicating large whale wallets aggressively accumulating XRP as a potential alternative channel for international trade settlements. Now, for U.S. investors looking for utility-backed assets to survive all this market volatility, all eyes are currently fixed right on the U.S. Senate. The market is highly anticipating the upcoming June vote on the Clarity Act. This is a genuinely crucial piece of bipartisan legislation aimed at definitively making XRP's status as a digital commodity permanent U.S. federal law. If this passes, it removes the regulatory gray area completely, once and for all. And the market impact of this vote? It really cannot be overstated. Advanced predictive models are already pricing in the potential outcome. We're seeing AI models like Grok actively forecasting a price target between $2.50 and $2.80 for XRP if the Clarity Act successfully passes the Senate floor. That is exactly the kind of upside smart money is quietly accumulating for, while retail is completely distracted by Bitcoin dipping. But beyond Ripple, there are other hidden bullish signals acting as silver linings in this crash. Institutions are undeniably buying the dip right now. For instance, Samsung just acquired a 4% stake in Donamu, the parent company of South Korea's largest crypto exchange, Upbit. Furthermore, while billions were liquidated, capital didn't completely exit the crypto ecosystem. USDT and USDC stablecoin dominance actually rose sharply. What does this mean? It means investors are sitting on massive piles of cash on the sidelines, just waiting to aggressively deploy it. And finally, the CFTC is facing serious legal and political pushback over its proposed prediction market restrictions, which could heavily favor and legitimize platforms like Polymarket moving forward. The fact is, smart money is positioning itself right now while there's blood in the streets. So I want to know exactly how you are navigating this volatility. I want you to involve yourself in the YouTube community post right now to share your dip buying strategies. Are you holding stablecoins or are you aggressively accumulating utility assets? Seriously, jump in there and let the community know what your game plan is. We are witnessing a very clear divide right now. On one hand, Bitcoin and Ethereum are suffering short-term leverage-induced liquidations from geopolitical fears. But on the other hand, Ripple is aggressively accumulating banking licenses, Wall Street utility, and massive institutional volume. So the critical question remains, is this the ultimate shakeout before the next massive leg up? Or is it deeper, more brutal correction towards 68K incoming? U.S. investors, you need to decide right now if you're rotating your capital into utility like XRP before the Senate votes. Click the card on screen right now to see our upcoming deep dive into the geopolitical fallout, and make sure you subscribe to Crypto Global News before the next liquidation hits, because what the whales are planning for next week is going to catch 99% of the market completely off guard.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.